Our team advises institutional investors on adopting sustainable investing approaches really through our responsible investment pathway, or RI pathway as we call it, which starts off with beliefs, policy, process, and portfolio. And what we really mean by this is that starting with beliefs, which is really the underpinnings of what sustainable investment strategy should look like. So understanding from the fiduciary's perspective, plan sponsor's perspective, what do they believe are the material risks and opportunities facing their particular portfolio? And do they believe that ESG integration as an investment approach can be a strategy for mitigating those risks or seizing those opportunities? And then furthermore, are there particular themes or sectors that they'd like to tilt away from, or tilt towards? And so really the beliefs piece is important. It's kind of surveying and understanding those fiduciary perspectives. We then take the findings of those individual surveys of fiduciaries and integrate those into the investment policy statement so that it provides a framework for engagement with managers, manager selection processes, so that there's shared understandings around what ESG factors are going to be that should be included in the investment process, and what particular risks and opportunities that particular investor is looking for. Once the policy has been updated, then what we look to then is the investment process. And really this might seek to find highly rated ESG managers or particular strategies from those managers. And through our proprietary database and manager research process at Mercer, we've developed about 4,500 different ESG ratings across all different asset classes. So seeking to align the portfolio with, again, the investor's preferences. And then finally, the portfolio piece is really looking at monitoring and performance reporting to understand how these ESG factors are not being taken into account and acted upon by managers. It might also look at active ownership approaches by those managers, whether they're voting their proxies according to the investor's beliefs and perspectives, and whether they're engaging with companies on those underlying risk and opportunity factors. So Mercer's perspective on the growth of ESG in the DC retirement plan space is that we see trends just moving pretty much one direction. You have this upwelling of interest from plan participants, often many of whom are, if they're younger, they might be more diverse. They really seek to align their investments with their values. When you're talking from a plan sponsor perspective, however, kind of values alignment is really a tough thing to do in the DC plan context, particularly under ERISA guidelines. So what we seek to do then is to help plan sponsors understand, A, what does the ESG landscape look like? What are their options across different asset classes for offering more ESG-oriented or sustainably-oriented options to their plan participants? And then finally, finding what sort of managers they'd like to invest with and offer in their lineups. So, what we're seeing increasingly is move from, rather than offering a single solution or ESG-oriented solution in the plan lineup, which might just be a core equity allocation. What we're seeing now is plan sponsors wanting to offer more options for diversification within that ESG context, what we call an ESG tier. So it might be a global or international equity allocation, a domestic equity option, and then finally a fixed income option, all of which are ESG oriented. And so we find that this is offering the plan participants more optionality in their investments, and something that we're hearing a lot of interest in. We believe that there's still a lot of room for innovations in the target date fund, or TDF space in particular. There's an increasing shift towards plan participants wanting to just have somebody else manage their portfolio for them. They want to set it and forget it, essentially. Now, there's room for ESG integration within the TDF as well, though, whether it's looking at perhaps integrating some ESG funds into the underlying kind of subset of funds that make up the TDF, or if it's looking to kind of do an ESG overlay for the entire fund itself. So we think that there's a lot of room for innovation there. Not a lot of products on the market yet, at least in the United States space, and so we believe that there's going to be increasing interest in that space from plan sponsors going forward.